Today we are looking at the pros and cons of buying and selling property off-plan. We'll get insights from Fusion Capital, a real estate investment and private equity firm, on their success story as developers and how they have managed to sell their projects off-plan. Karibu sana on the show.
Thank you very much, Nancy.
Give us an overview of Fusion Capital and what you're doing and how you're changing the real estate landscape.
Well, thank you, Nancy. So Fusion Capital is a private equity company. We manage funds from international investors and deploy it in real estate and a bit of it in private equity. At the moment, about 70% of our funds are invested in real estate across East Africa. We also do fund management for local investors. So those will be people investing between $1 million to no limit, who would want the money exposed in various investment schemes. We do that under our fund management arm, which is a regulated entity by Capital Markets Authority, but also regulated in the UK by the Financial Conduct Authority. But mainly in East Africa, we are really known for real estate at the moment, and we have properties across the region that anyone can see and touch. It's been a 10-year journey. The first 5 years mainly investing in small and medium enterprises, and then we developed, or we increased that and moved into real estate, where we invest in real estate ranging from 300 billion shillings currently to about 4 billion shillings, which are the sizes of the investments that we've made across the region.
Which are your flagship projects?
In Nairobi, Upper Hill, we have two projects that are very well known in this market. So one is 4th Avenue Towers, which is a development that is on sale on a floor-by-floor basis. And in Upper Hill, you also have Flamingo Towers, which is an 18-floor development that is currently letting, and ultimately the intention is to sell it as a yield investment. But also very well known in the region is Kigali Heights, which was launched in December. By Rwanda standards, it's one of the biggest private investment development, but also regionally it stands out, seated right across the Kigali Convention Center. It's currently nearly fully let. On the retail side is 100% let. On the office side is about 75% let, and so on average you're way above 75% occupied. The intention is to soon put it into the market and sell it again as a yield investing, and these will be exposed to fund managers not only in East Africa but in South Africa, Europe and Asia.
Let's talk about the residential market. What do you have in that space?
In residential, we've done quite a bit. I think early last year we did exit a development we had invested in Athi River, known as Graceland Athi River. We have investment in Nakuru, what we call Monty Apartments in Nakuru, Kiamunyi area. In Mombasa, Marina Creekside, which is again currently almost in its completion phase, and again selling on a unit by unit basis. But we have other planned developments. We have a 100-acre piece of land in Ruiru, neighboring Tatu City, which is master planned for about 379 units. The intention was to master plan and then offload it. So those are some of the things that we've done on the residential space. We are currently looking at new opportunities in Rwanda and in Kampala. In Kampala, we do have a residential investment in Bukoto area. They are furnished and currently being operated as furnished apartment. Another development that will probably be known to you is in Meru. We are currently, we've just completed the fundraising for a mixed-use development that will again entail retail, office, and residential that again will be out for sale very soon.
But it's also the biggest in Meru.
It is the biggest private investment in Meru. So over the last 4 years of devolution, now 5th year of devolution, I think it's the biggest private investment. It's going to be about 3.2 billion shillings investment. So we're very proud of what we've achieved across East Africa.
Well done, well done.
Thank you.
I know that you're dealing with cemetery investment.
Right.
Please talk about it.
Well, cemetery investment is an interesting investment, and we see it as part of the real estate. Ultimately, when you have lived, you will need to go and live somewhere else, and that's in a grave. And so we have invested in a 64-acre piece of land on the Nairobi-Nakuru Road. Is going to deliver about 35,000 burial sites. And the idea is to basically provide a decent burial place for people. Today, I think you struggle with burial sites, and a lot of it we've just relied on government. And as we've noted over the last few years, it's been difficult even for government to deliver decent burial sites. And so we saw it as a window, as an opportunity. And we are going to deliver it. Actually, the intention is to break ground within this year. We are a minority shareholder in this investment. It's being sponsored by Alliance Capital Partners and a vehicle known as Peponi Investment. The cemetery will be branded as Gates of Power.
Wow.
Yeah.
Wow. Our topic today is the pros and cons of buying property off-plan. I know as a developer you have sold a lot of your projects off-plan. What's your take on this model?
Well, it's a great model, but then we have to be honest and agree that not everybody can do it. We have had some serious mistakes that have been made by some of the developers in this market, where property is sold out and the company goes under, and that becomes the end of the story. The beauty of buying off plan is you get significant discount, and when you're dealing with a tried and tested developer, then you're in a very good position, and you will also have the opportunity to offload the property either in the course of the development. So towards the end, you can then decide, prices have gone up, I've achieved my markup, I'm happy to sell the property. And that's the beauty. And there's a huge market, and there are developers in this market who we can qualify as tried and tested and can be relied upon when it comes to off-plan selling or buying of properties. But then on the other side, we've had experiences where you put in deposits and either the development never takes off or the company goes under. And that's usually mainly because development has several components in it. One is financing, two is statutory approvals. And if some of those things are not checked before you start pre-selling, then there's a possibility that when you go on the ground and start development, you get to a point where you really can't proceed, and you're stuck with people's money. It becomes very difficult. Mm-hmm. Yeah.
And what have you done in your case?
Well, what you realize with Fusion Capital, a lot of our developments are self-funded. So we do put in significant equity in our projects, up to 50%. The balance comes from the bank. And by the time you're having a 50% equity funded project, it becomes very easy to source debt funding. And that takes out a lot of risk as far as completion is concerned. You're not having to deal with financing challenges. And so you're assured of delivery within the period that you promised your buyers. And that, I think, has put us ahead of many developers. And I think what the buyers want assurance on is that ultimately
the development will be delivered. Within the expected timelines.
Within the expected timeline and within the quality that you had promised. So we've learned the discipline of not over-promising on both quality and time, but then we've ensured that we deliver on both aspects.